Hey folks, welcome you all to a new video. This is CA Ganesh Bharadwaj. So in this video, let's get started with a brand new chapter called transfer pricing. Now this chapter transfer pricing helps us achieve the objective of control. It helps us achieve the objective of control. And how will we be able to achieve this objective? By promoting interdivisional competition which actually increases the efficiency of all the divisions in the company. Okay, now, sir, what is this? You are using some technical language and all. Yes. Now, this chapter, transfer pricing, it requires a lot of reasoning. And if you see in CMA Inter, this chapter has been kept as a part of your management accounting syllabus. But actually, if you see, this is a final level concept, but only certain basic elements are kept in our intermediate. For instance, if you compare this with CA course, in CA course, transfer pricing is not there in intermediate level at all. It is a CA final level concept. Yes, but in CMA, since cost and management accounting forms the major core of this particular course, so they have kept certain basics of transfer pricing in this particular level itself. They have kept some basics of transfer pricing in intermediate level itself. Advanced level topics are there in CMA final. Now, a very important thing that I want you to understand is this chapter requires a lot of reasoning, so it requires good continuity. So you might be having certain doubts like in between whenever I say something. Please reserve your doubts till the end of this chapter, because only after we reach the end of this chapter you will be able to connect all the dots. Are you clear with this? Yes. Now, first, sir, you have written a few things. What are all these things? We don't understand anything. Yes, I will explain everything right now. First, this chapter helps us achieve the objective of what? Objective of control. So this chapter helps us achieve the objective of control. Now, you might have a doubt. Sir, this chapter transfer pricing, 1 minute. So if you go to the index, so syllabus as per ICMA study note, they are saying decision making tools. They have mentioned here decision making tools. In that they have mentioned 3 chapters: marginal costing, applications of marginal costing, and transfer pricing. So this transfer pricing, which is chapter 5, is mentioned under decision making tools. Sir, but you are saying the objective of this chapter is control. Sir, how is it? Isn't it contradictory? That is what I'm going to explain right now. Now, remember, this chapter transfer pricing has the objective of actually enhancing the control. It has an objective of enabling control in an organization. Then why have they given decision making here? Basically, this decision making that they refer to is an internal decision making. It is not an external decision making. It is an internal decision making. What do you mean by internal decision making? Taking decisions within the organization. Fine. Now, you might not be able to understand this completely at this point of time. So I will actually illustrate this with an example, and we will be solving one full numerical problem. And then in this video itself, you will get the basics of transfer pricing. Like, why do we need this transfer pricing? What is a transfer price? And how does it help to achieve the objective of control? All of that you will have a crystal clear clarity. Are you clear with this? So basically, transfer pricing, what is the objective of that? It enables control, no doubt. Now, how it happens? By way of internal decision making. So now, let me take an example to explain certain small concepts, and then I will get into what a transfer price is. So first, let us take an example of Pepsi. All of you know this company called Pepsi, right? Yes. So what business are they in? Soft drinks manufacturing. Now, let us say for our example purpose, This company Pepsi has two divisions. It has two divisions, division A and division B. Okay, division A and division B. Please carefully understand. You need not write down anything. Maybe if you want here and there, you can catch up running notes. Anyways, this running notes, whatever I'm writing, will be available to you. Please understand, because all these things have been mentioned in a theoretical manner in our institute study material, which I have just kept it like that in our handbook also. But this explanation, the practical explanation, this value addition happens only in the classroom, only in the lectures. So please listen to this carefully. Only then you will understand what you mean by transfer price, why should we have transfer pricing, and all these allied areas. Are you clear with this? Yes. Now, we have taken an example of Pepsi, and I've told you in our example, let us say Pepsi has two divisions, division A, division B. Now, what does division A do? Division A manufactures, let's say, empty bottles. It manufactures what? Empty bottles, correct? And what does division B do? So division A manufactures empty bottles, and then it transfers, it gives the empty bottles to division B, and division B, what do? They pour that Pepsi inside that bottle, seal it, and they sell it. Or basically, this division B, what happens? Here only the soft drinks get manufactured. The soft drink gets manufactured, and they are bottled and they are sold in the market. Are you clear with this? Simple example I am taking. Pepsi, two divisions. Division A manufactures empty bottles. Division B, so it takes the empty bottles from division A and then it fills it with Pepsi, that is the soft drink, and then it sells the bottled, it sells the Pepsi in the outside market. This is how it works. Perfect. Now, in this case, we call division A as the supplying division. Division A is called as the supplying division. Why? Because division A, it supplies the empty bottles to whom? To division B. Correct or not? Yes. And how about division B? Division B is called as the receiving division. Receiving division. Why? Yes, it receives the empty bottles from the supplying division, which is division A. And most importantly, if you see, the product that gets transferred from division A to division B is what? Empty bottles, right? That empty bottle is called as an intermediate product. Intermediate product. Intermediate product. Look, all this example is not there in your study material. I'm just giving an example so that you can easily understand the terminologies, which will enhance your level of understanding in this particular concept, right? So there is a supplying division, there is a receiving division, correct? And what gets transferred is called as an intermediate product. In our example, that empty bottles. Are you clear with this? Yes. Now, what is the problem here? What is the problem? Why do we need this transfer pricing? What is the transfer? What do you mean by transfer pricing? All of that we are going to see in this particular area right now. Now, for us to understand this, there is a concept called as cost center and profit center. Sir, what do you mean by a cost center? What do you mean by a profit center? Cost center means the division that is responsible only for incurring cost is called as a cost center. Profit center means a division which is responsible for generating profits. Now, logically you think and you tell me, between division A and division B, which can be called as a profit center? Now, division B, what do they do? So they actually take the empty bottle from division A. Yes, they actually they manufacture the soft drinks and they sell it. They sell it in the outside market. Correct or not? Yes. Yeah. Now, division B generates revenue. Yes. It also incurs cost. Yes. And revenue minus cost is what? Profit. So basically, can I say division B is technically speaking, can I say that division B is a profit center? Division B is a profit center. Correct? Division B is a profit center. Whereas if you look at division A, now division A, what it does, it just incurs costs to manufacture. It buys plastic, converts it into bottle and supplies it to division B. That's all. No, does it generate any revenue? No. Why? Because everything gets transferred to division B. Division B is also a part of this organization only, correct or not? Yes. So can I say division B here does not generate any revenue? It is a particular division that is exclusively present only for incurring cost, and hence I will call this as a cost center. I will call this as a cost center. So always remember, all the divisions of a company need not be a profit center. Certain divisions can be a cost center, certain divisions can be a profit center. It sounds logical, correct? Because division A manufactures empty bottles and gives it to division B. Division B, using that empty bottle, it fills the soda, that is your carbonated water, your Pepsi, and then it sells it in the market and generates revenue. So since division B generates revenue as well as incurs cost, it is called as a profit center, whereas division A does not generate any revenue, it only incurs cost, it is called as a cost center. Are you clear with this? So what are all certain terminologies that we have seen here? Cost center, profit center, supplying division, receiving division, intermediate product. See, all these terminologies are theoretically mentioned. They are theoretically mentioned in your institute study material. I just took an example to explain what these things are so that logically you can enter into the subject. Now, what is the problem? Sir, why are we studying all these things in the context of transfer pricing? First of all, sir, what do you mean by transfer price? You tell that first. Now, before I tell you what you mean by a transfer price, first I will tell you what is the problem here in this company. What is a problem here in this company? So in this company, if you see, once again, I'm just drawing it here. So in this company, there is a head office, correct? Pepsi, there is a head office. There is a division A, there is a division B, correct? Yes. Now what happens? Division A, we saw that division A is a cost center, correct? Division B is what? Division B is a profit center. Now you logically think and you tell me, there will be there will be a manager for each of these divisions. Division A has one manager, division B also has one manager. Now you tell me, who will be motivated to perform better? Obviously the manager of division B. Why? Because his particular department, his particular division generates profits which can be quantifiable. More the profit, I will appreciate him, correct or not? But there is no such thing for the manager of division A. Why? He keeps on incurring the cost, transfers it to division B, keeps on incurring the cost and transfer whatever is the cost, he will transfer it to division B. That's all, correct? Empty bottle. So if you look at this, obviously the division A's manager, that is a cost center's manager, will not be motivated to perform well because his division does not generate any profit. While the other division generates profit, always the other division only gets a priority over him. Are you clear with this? This is the problem. So division A is a cost center while division B is a profit center. Are you clear with this? Why is it so? Because division A manufactures something called as intermediate product, and that intermediate product always gets transferred at cost to the receiving department. Are you clear with the receiving division? Are you clear with this? Now, this is where the concept of transfer pricing comes in. So what they are saying is, look, if division A is kept as a cost center and division B alone is kept as a profit center, it will not create a healthy competition, or in other words, it will not be fair on the part of the company as a whole to judge the performance of different managers, correct or not? Because division B is a profit center, you can clearly quantify the level of profits they make, whereas division A, there is no factor at all for you to judge, to evaluate whether they are performing well or not. So hence we have included a concept called as transfer pricing. Sir, what is transfer pricing? Simple. Now, what happens is division A is now a cost center, correct? Now, if you introduce transfer pricing, now division A will also become a profit center. Division A will also become a profit center. Sir, what are you saying? How will it be a profit center? I will tell you. Now, till now what was happening? Division A transfers its intermediate product. In our example, the intermediate product is what? The intermediate product is empty bottle. So division A transfers the empty bottles, intermediate product at cost. That's how it was generally happening. Why at cost, sir? Because everything, division A, division B are like two hands of the same person. So if there is any transaction happening between these two, why would there be a profit? Correct. So generally it was always happening within the organization. So division A was always treated as a cost center and it didn't have any motivation. Now they are saying, if you inculcate the concept of transfer pricing, the intermediate product should be transferred to the receiving department, not at cost, but at a price slightly above the cost. At a price slightly above the cost. So let me give you an example. Right now, let us say in division A, division B. Right now, let us say division A. Let us say the cost incurred to manufacture per unit of water bottle, not the water bottle, the Pepsi bottle, right? The empty bottle. Let us say the cost incurred per unit is rupees 5. Okay. Division B, let us say the cost incurred per unit. Let us say it's rupees 15. What is the cost incurred here? Basically for that soft drink, manufacturing, it is rupees 15. Right? Fine. And division B, what they are doing, they are finally selling it at a selling price of, let us say, rupees 40. Are you clear with this? Now, what happens generally if there is no transfer price? What will happen? If you see overall, so division A transfers the empty bottles to division B always at 5 rupees. Correct? Yes, whatever is the cost, at cost only it gets transferred. Correct. So now division B, what happens? It incurs 15 rupees of soft drink manufacturing, plus for this empty bottle, they incur this 5 rupees. Correct. Overall, now division B incurs 20 rupees of overall cost. Correct. Division B incurs 20 rupees of overall cost. Correct. Yes. So now if you see, division A will have zero profit. Why? It transferred at 5 rupees and the cost was also 5 rupees. So the profit is equal to 0. Whereas if you see for division B, what happens? For division B, the selling price is 40, whereas the overall cost is 20. So the profit will be 20 rupees. Correct or not? This is how generally it happens. Yes. Fine. Now what they are saying, look, division A, when you are transferring the intermediate product to division B, don't transfer it at cost. Transfer it at a price slightly above the cost. That is, you treat this division A as a separate company. You treat this division B as a separate company. For some time, don't think that these are brothers. Treat these two as separate entities and then you do this transaction. So now they are saying your cost is 5 rupees. Let us say, for example, division A should transfer the empty bottles to division B not at 5 rupees but at 8 rupees. Are you clear with this? So now what happens? I'm just rewriting this here. Division A and division B. So what happens? Division A transfers this intermediate product to division B at how much? Let's say 8 rupees. Correct? The price at which the intermediate product is transferred by the supplying department to the receiving department is called as a transfer price. Are you clear? So what do you mean by a transfer price? The price that is fixed for the intermediate product, the price at which the transfer happens for an intermediate product is called as a transfer price. Now, if you see what happens, the same example, what happens? Now, from the viewpoint of division A, the revenue will be per unit will be rupees 8, correct? Because I'm treating this as a separate entity by itself, correct? Yes. So look at this from the viewpoint of division A exclusively. Every time I transfer 1 unit to division B, it generates a revenue of 8 rupees, correct? I am not selling it to outsider. If I selling it to outsider, this price is called a selling price, correct? Since I am transferring, since I am selling it to my internal person, another division, I give it a name called as transfer price. Are you clear with this? We give it a name called as transfer price, the price at which the transfer happened. If you do it to an outsider, it's called a sales price. If you do it to an insider, it's called as a transfer price. As simple as that. Now look at this, how beautifully it works. Division A, every time they sell one unit, it generates a revenue of 8 rupees, correct? Now how much is the cost? The cost is going to be 5 rupees for them, we already saw. Now the profit is going to be how much? The profit is going to be 3 rupees. Are you clear with this? So division A says, now I am booking a profit of 3 rupees. Earlier it was just a cost center, no profit and all. But now they have started generating profit, correct? Now look at this from the viewpoint of division B. Division B, what will be the revenue? Revenue means what? Sales, correct? What will be the revenue for them? Selling price, 40 rupees, correct? Because now division B makes the final product and sells it to the market, correct? If they are selling it in the market, that is called as a selling price, correct? They get how much? 40 rupees. Are you clear with this? Yes. Now, from the viewpoint, think at this strictly from the viewpoint of division B. Fine. Don't think of this as a company from the viewpoint of company as a whole. Think of this only from the viewpoint of division B. Now you tell me, from the viewpoint of division B, what is the cost? Now there are two costs for them. There are two costs for them. One cost is what? One cost is the cost of manufacturing the soft drink, which we saw earlier. Manufacturing soft drinks is how much rupees? 15 rupees per unit, correct? It costs them 15 rupees. Plus now every time they buy an empty bottle from division A, now they need to pay 8 rupees, correct? Not 5. They need to pay 8 rupees, correct? So now the overall cost for every unit that is being done in division B is going to be 15 plus 8, which is going to be how much? 23 rupees. 15 plus 8, which is going to be 23 rupees. Yes or no? Right? So now if you see here, what is the overall profit that is being mentioned? So what is the overall profit here? It is going to be 17 rupees. It is going to be 17 rupees for division B. Now forget division A, division B. Look at this from the viewpoint of the company as a whole. So from the viewpoint of company as a whole, let us look at this. Final sales price. What is my final selling price? 40 rupees, correct? Look at this from the viewpoint of the company as a whole. Forget division A, division B for the time being. Now look at this from the viewpoint of the company as a whole. Now, for me to sell every bottle of Pepsi, what is the overall selling price that I generate? 40 rupees. Perfect. What are all the total costs that are incurred? Forget the transfer price concept and all. What are all the total costs incurred by me? Yes, in division A, I incur 5 rupees, and in division B, I incur how much? I incur 15 rupees. Correct? That is what we saw. Correct? Division A, we incur 5 rupees. Division B, we incur how much? 15 rupees. So totally from the viewpoint of the company, they incur how much? They incur a total cost of 20. So from the viewpoint of the company, the overall profit is how much? The overall profit is 20 rupees. Correct or not? Yes. Now, there are a few observations that I want to make. Number one. Now, the profit for the company as a whole was how much? 20 rupees. Yes? Yeah. Now, earlier what was happening? The entire 20 rupees of profit, the credit for the entire 20 rupees of profit was taken by the manager of division B. Are you clear with this? But now, after introduction of transfer price, what has happened? This 20 rupees of profit, has been properly distributed to the two divisions. 3 rupees of profit was generated from division A, 17 rupees of profit was generated from division B. So here what we are able to do is the overall profitability can be fairly and properly distributed to the respective departments so that all the divisions get the due credit. So whatever work they have done, they get the proper credit for that. Are you clear with this? That is, their performance is getting fairly measured. Are you clear with this? Their performance gets fairly measured because of introduction of transfer price. Are you clear with this? So what I said, overall profit of the company is 20 rupees only, correct? Now, earlier when there was no transfer price, we were saying that entire division B makes 20 rupees profit, division A makes 0 profit. But now after this introduction of transfer price, where the transfer price was fixed at 8 rupees, what happened now? What happened now? This 20 rupees of profit, we are saying 3 rupees was generated from division A and 17 rupees was generated from division B. So that now what we are doing is we are properly evaluating and we are properly giving the credit to the respective department for whatever work they have done. Are you clear with this? This is learning number 1. Learning number 2. Very, very important. Very important. Transfer price does not impact the profit of the company as a whole. I'm repeating, transfer price does not impact the overall profit of the company as a whole. It only impacts the department-wise profit. I'm repeating, transfer price does not impact the overall profit of the company as a whole. It impacts only the your division-wise profit or your department-wise profit. So what do you mean by this? Now, you tell me, earlier there was no transfer price. What is the overall profit? 20 rupees. Now there is an introduction of transfer price. What is the overall profit? Same 20 rupees. Now, so transfer price, which means does not affect my whole profit, my profit of the company as a whole? Absolutely not. That is why I said this is an internal decision making. It does not affect, because I keep a transfer price, it does not affect my company as a whole. But inside the company, division A and division B's profit gets affected. That's why I said transfer pricing is an internal decision making that is used for control purposes. Now, why is this happening? Sir, why does transfer price not impact my overall profit? Very simple. Very simple. Now, in this case, transfer price was fixed at how much rupees? 8 rupees, correct? Always remember, this transfer price is a revenue for the supplying department, correct? And exactly the same transfer price is the cost for the receiving department. Are you clear with this? I'm repeating, transfer price is what? It is the revenue for the supplying department. It is exactly also the cost for the receiving department. So overall, if you see, this gets knocked off. Overall, if you see from the company's viewpoint, it gets knocked off. That's why we say this transfer pricing creates an artificial competition inside a company. It creates an artificial competition inside a company. So why do you need an artificial competition? Only then the evaluation of all the performance of each and every division managers will be done properly in a much effective manner. Is it going to impact my overall profitability? Absolutely not. But the objective here is to promote the motivation, is to increase the motivation of every single manager in the company, every single managers of every divisions in the company. And why do we do that? We do this because only if they are motivated, overall objectives of the company can be fulfilled properly, and this can have a better control. This way you can have a better control in the organization. Are you clear with this? Are you clear with this? So we learned two things. Number one, transfer price does not impact your overall profitability. It does not impact your overall profitability. However, it impacts what? Division-wise profitability. How? Simple. What is revenue for the supplying department is a cost for the receiving department. It gets knocked off in total. That's why for the company as a whole, it makes no difference, but it makes difference only for division-wise profitability. Are you clear with this? This is a very important learning that we saw here. And this concept of transfer pricing does what? It promotes internal competition inside the company. Why do we do that? In this way, the company, the top management, the board of directors or the managing director, the head office will be able to have a very good control over the affairs of the entity, because all of them are motivated to perform well. Automatically, the company will grow. Are you clear with this? Suppose this division A was kept as a cost center, division B alone was kept as a profit center. Division B manager will be over motivated. Division A manager will never be motivated. If Division A manager is not motivated, who will supply the bottles to Division B? Correct? Bottles will not be supplied properly. Hence, the entire objective, entire organization itself will fail. That's why the main objective of this chapter, which is transfer pricing, is to ensure that all the managers of every division are properly motivated so that they are given the due credit, and overall the control is getting exercised that helps us achieve the overall objective of our company. Are you clear with this? Yes. Now I will just write down a few things here. You need not write down because anyways I'm just going to give this to you, so that shouldn't be a problem, right? Yes. So I'll write down. Basically, the supplying division is a cost center. Correct? The supplying division is a cost center. However, to promote interdivisional competition, and to improve the efficiency and control, companies may treat the supplying division as profit center. Right? So basically the supplying division, in our example, supplying division is what? It is division A, correct? It is basically what? A cost center. But to promote the interdivisional competition and improve the efficiency and control, the companies may treat the supplying division as a profit center. Are you clear with this? Are you clear with this? Yes. One more point I will mention. Transfer of intermediate product. IP stands for what? Intermediate product. So transfer of intermediate product will be deemed to be sales. For whom? Sales of the supplying division. Correct? Supplying division. And the transfer is made at a price higher than cost, and hence is called as transfer price. Right? So the transfer of the intermediate product will be deemed to be the sales of the supplying division, and the transfer is generally made at a price higher than the cost, and hence it is called as the transfer price. Whereas if you see division B in our example, the price at which they sell to the outside market is called as a selling price, whereas division A, the price at which it transfers to division B, here we are transferring to another department. That's why we don't call it as a selling price, we call it as a transfer price, and transfer price is generally more than the cost. Why? This is done to actually promote what? The internal competition. This is done to promote the internal competition, and in turn all the managers of all the departments get motivated. So if transfer pricing is introduced, what happens now? A cost center becomes a profit center. Are you clear with this? A cost center becomes a profit center, and artificial competition gets created inside the company. But does transfer pricing impact the overall profit of the company? Absolutely not. Why? Because what is revenue for the transferring division is, what is revenue for the supplying division is a cost for the receiving division. It gets nullified as a whole. So it doesn't make a difference, the overall profitability, but division-wise profitability will change because of transfer pricing. And based on division-wise profitability only, the performance of the division managers are evaluated. And hence, this helps achieve the objective of control. Are you clear with this? Are you clear with this? Yes. A few more points I will mention. So transfer pricing is the selling price to supplying division. It is the selling price to supplying division and purchase cost to whom? To the receiving division. To receiving division. It is purchase cost to receiving division and is neither selling price nor purchase costs for the company as a whole. For the company as a whole. Are you clear with this? Many people confuse this. Many students get confused here. Transfer pricing, sir, it impacts? No, it doesn't impact your overall profit. From the viewpoint of the supplying division, it is a selling price. It's a revenue, correct? From the viewpoint of the supplying division, it's a revenue, correct? From the viewpoint of the receiving division, it is a cost. And from the viewpoint of the company as a whole, it is neither a cost nor a revenue. It is just an internal thing that is happening between the multiple division, and we create an artificial competition. Why do we do that? We do that so that the performance gets properly measured. The performance of all the divisions gets properly measured, and all the divisions get their proper credit for whatever work that they have done, and this in turn helps overall control of the organization. Are you clear with this? Are you clear with this? Yes. And finally, one last point let me mention. I have mentioned all these things. I'm just putting it in writing so that whenever you are just revising, all these things will be very, very helpful. See, these things are not as such in the study material, but they have mentioned it in so many paragraphs. This is a very good way to enter into the subject, and that's why I've just kept it like this. Clear? Yes. Now, thus, transfer price will affect divisional profit. Will affect divisional profits, but does not affect the company's profit. Does not affect the company's profit generally. Does not affect the company's profit generally. Are you clear with this? So now, what was this? Overall, whether you had a transfer price or not, overall profit is how much? Overall profit was 20 rupees. Yes. Without transfer price, what was the breakup? Division A 0, division B 20. But after the transfer price, now the breakup is division A 3 and division B we have given 17. Overall profit remains the same, but division wise profit actually changes. Are you clear with this? Now this way, even the division A manager is also now motivated to perform well. Why? He was earlier a cost center. Now he is getting treated as a profit center, and because now he is getting treated as a profit center, he also wants to do what? He also wants to achieve maximum profit for his division, correct? So these people, what they will do is, division A's manager will think for his division only. He will not think of the company as a whole. Division B's manager will think only about his division only. He will not think about the company as a whole. There is a head office. There is a head office where overall they will see what is good for the company. So we will enter into that in a later part of this chapter. But as of now, you understand first what do you mean by a transfer price? The price at which the intermediate product gets transferred between the departments, correct? It's an internal price. Are you clear with this? Yes. Does your transfer price affect the overall profitability of the company? No. Then what does it affect? It affects the division wise profit. Now what am I going to do with division wise profit? Using the division wise profit, you can judge the performance, you can assess the performance of each and every division, and you can reward or punish them accordingly. Are you clear with this? So this way, it helps create an artificial competition inside an organization, which will increase the efficiency and thereby exercise overall control in an organization. As simple as that. As simple as that. Are you clear with this? Yes. And of course, we have seen a few jargons like what? Supplying division, receiving division, intermediate product, cost center, profit center. Yes, we saw all these jargons here. And yes, we also saw that it doesn't affect, your transfer price doesn't affect the overall profitability. It affects only the department wise or division wise profitability. All of that we've seen. Now, one more thing that you need to understand. There is one very important rule for transfer pricing to work. This is a very fundamental understanding that you need to have. Now, you just tell me, one second. Now, yes, here, transfer price I told you was 8 rupees, correct? I just told you it's 8 rupees. Fine. Now, fixing a transfer price is generally a very difficult task. Why, sir, is it a difficult task? I will tell you why. I will tell you. Now, division A will always want a higher transfer price. Why? Because transfer price is a revenue for, it's a revenue for whom? Supplying division, correct? So division A will always want to fix the transfer price more, whereas division B will always want to fix the transfer price less. Why? Because transfer price is a cost for the receiving department, correct or not? Then how will this transfer price be fixed? How will it be fixed? This guy wants a more transfer price. This guy wants a less transfer price. Between the divisions, there could be a clash. So there are different methods at which your transfer price should be fixed. Are you clear with this? Now you can think, sir, what is this, sir? You are saying division A is there, division B is there, and on the top there is a head office, correct? Corporate office is there, head office. They take care of the entire, both the divisions come under this company only, no? Correct. Now, if division A, let us say division A says, I want a transfer price of 15 rupees. Division B says, no, I want a transfer price of only 8 rupees. Example. Now, sir, here you have 15. A demands a transfer price of 15 rupees. Why? More the transfer price, more the revenue of department A or division A. Whereas division B says, no, maximum transfer price, I am ready to pay you only 8 rupees. Why? Because more the transfer price, more will be the my cost, division B's cost, correct or not? Anyways, from the whole viewpoint of the company, it will not impact, correct? It gets knocked off. But now have one thing in your mind very, very clearly. Have one thing in your mind very clearly. In case of all these things, transfer pricing, in case of fixing the transfer price, nowhere should the head office interfere. I am repeating, the head office or the centralized office, the board of directors, or the top management should not interfere in fixing the selling price. Or in other words, the concept of transfer pricing can function only when there is a decentralized form of organization. What do you mean by decentralized form of organization? In case of a centralized organization, all the decisions are taken by the top management. Whereas in case of a decentralized organization, certain decisions are delegated to the division level and they are given the full authority. They are given the full authority to take certain decisions on their own. Are you clear with this? So a very, very, very important thing in transfer pricing is transfer pricing can work out only when there is a decentralized form of organization. Suppose all the decisions are taken at the head office level itself. Now you tell me, why should I motivate division A's manager and division B managers? Anyways, the decision is taken by the head office only, and transfer price does not affect the overall company. It does not affect the head office anyways. Correct or not? Then why should there be a transfer price when there is a centralized form of organization? No. So only in case of a decentralized form of organization where certain decision-making powers are delegated to the divisions, only then transfer pricing can function. And fixation of transfer price, when it comes to fixation of transfer price, it cannot be interfered by the head office. Are you clear with this? So the top corporate office, the top boss cannot come and say, look, I like department B, so you fix the transfer price as 8 rupees. Or I like department A, so the transfer price should be fixed at 15. No, it will defeat the objective. It will defeat the objective. Are you clear with this? A very, very important understanding here, right? Now, we just saw that our transfer price can function only in a decentralized form of organization, correct? It can function only in a decentralized form of organization. And one more thing, division A was a cost center, Division B was a profit center. So I have to convert all my centers into profit centers. Only then this concept of transfer pricing will work out. Or in other words, if I introduce transfer pricing concept, the cost centers will now become profit centers, and now they will start competing with each other. It's a healthy competition which will help achieve the overall objectives of the company. Are you clear with this? Now, in this example, I told you transfer price is equal to rupees 8. I just told you, and based on that, we did the calculation. But the question here is, sir, how do we fix the transfer price? Because department A will always want a higher transfer price, department B will always want a lower transfer price. There is always a clash. So now the transfer price should be fixed very optimally. It should be fixed very optimally so that there is no conflicts between the department. How do we do that? That is what we are going to see throughout this chapter, so you don't worry about it. But the first thing, this session is more to do with why are we studying this chapter, what this chapter is going to say, and what is the objective of this chapter. This understanding you need to have broadly. Only if you have this understanding will you be able to proceed into this particular chapter. Are you clear with this? Now I just want to take your material, your study material. One second. No, not study material, our handbook. And I just want to read out this. Just a minute. Okay, look, in our study material, which is also there in our handbook, look, they have given a lot of paragraphs. By way of this, they have just explained these things. They have just explained so many things. The example I took and all was actually done specifically by me so that you will be able to understand the concept. If I just keep on reading all these things, you will definitely not understand. But now that I have explained the concept of transfer pricing, yes, an overview. We have not even entered into the subject. Don't worry. We have not even entered into the topic. How to fix the transfer price? What are the methods of fixing transfer price? When there are conflicts between the divisions, how do you resolve it? No, I have not entered into all of that. First, what we saw was, what do you mean by a transfer price? Why is there a need for a transfer price? What will it help achieve us? All these things only we have seen till now. Are you clear? Now you read the introduction, you will understand. Look, transfer pricing is concerned with the price one profit center charges another profit center. Are you clear with this? Division A was a cost center. Now it has become a profit center. Why? Because of transfer price. Now, if you directly read this in the very first line of this chapter, they have mentioned profit center and all. Will you be able to understand without the example? So remember the Pepsi example. So this Pepsi example is a must for you to enter into this chapter called transfer pricing. Yes. So TP, the transfer price, is concerned with the price one profit center charges another profit center within the company for the products or services provided. Since the supplying profit center's revenue becomes the receiving profit center's cost, correct? Division A's revenue becomes Division B's cost. The transfer price chosen can have a significant impact on evaluation of the profit center's performance. 020 now became 317, correct? Profit without transfer price 0 for division A, 20 for division B. But now with transfer price, for division A it is 3 rupees of profit, for division B it is 17 rupees of profit. That's what they are saying. It makes a significant impact on evaluation of the profit center's performance. See, now every single word you are able to understand clearly. Next, transfer pricing technique is a major issue in the current business world. As the scope of business is increasing day by day, it is not possible for the, yes, as the scope of business is increasing day by day, it is not possible for the upper level managers to manage such a large organization. Now, just imagine, I told you Pepsi for example's sake to understand the concept of transfer pricing. Just imagine Mukesh Ambani, who runs Reliance. Now, you just imagine, will he be able to take every single decisions of all the products and services that Reliance is entering into? Absolutely not. So it is not possible for the upper level managers to manage a large organization. So what is the solution? You should have a decentralized form of organization. Meaning what? give them decentralize, that is, delegate some powers to the respective divisions or departments or branches, whatever it is. So you make different profit centers, create a healthy competition. Create a healthy competition. So now, in this case, what we saw, division A, division B, correct? Now we create a balance. Why? Now the transfer price necessarily has to be fixed properly, correct? If the transfer price is increased, if you are fixing an unreasonably high transfer price, division B will not agree. If you are fixing an unreasonably low transfer price, division A will not agree. So there is automatically a balance created. So inside the organization, you are creating a balance. This way it helps to the overall objective of the company. Are you clear with this? Organization have a system of transfer pricing. Therefore, in order to assess the efficiency and effectiveness of its department and divisional managers. So decentralized form of organizations only can have the concept of transfer pricing. Why? To assess the efficiency and effectiveness of the department and its divisional managers. This overall helps achieve the objective of control. It is just an internal purpose. Transfer pricing is meant for internal purpose. Okay, this may be in spite of the fact that transfer pricing may be artificial in the sense that it is felt that there is no rationale for selling between departments and division. So I told you, right, it is an artificial competition. Why? Between departments, you tell me, is there a concept of selling? No. That's why it doesn't impact the overall profit of the company. But why are we doing it? To assess the efficiency and effectiveness of every divisions or departments inside. Are you clear with this? That's why I again connected to this area. I told you, why is it called as decision making? It is an internal decision making. Correct? Internal decision making is only this transfer pricing. Are you clear with this? So don't get confused. If someone is asking you, like, the objective of this chapter is control, then why is it being classified under decision making tools by CMA Institute? You tell them clearly, look, this is now definitely this is decision making only, but this is internal decision making, and whatever happens internally has more to do with control. It is not about like whether alternative A or alternative B is better. In marginal costing, it was more to do with decision making. Why? Because we are dealing with external people. Here we are talking about division wise, internal division, what should be the transfer price and all that. Overall profitability is not affected. Division wise profitability is only affected. And what will happen if the division wise profitability gets affected? It does not impact the company as a whole, but it impacts what? The effectiveness or the efficiency of inside divisions. So now Mr. Mukesh Ambani can clearly find out which division is performing well, which division is not performing well, and with this he can clearly punish or reward the respective departments. It's a control mechanism. It is not a decision making mechanism. Are you clear with this? Yes, internal decision making, but the overall objective is what? Control. Are you clear with this? Have this crystal clear clarity with you, right? And so for the purpose of better management and control, see, they themselves have given all these words are institute study materials word. So for the purpose of better management and control, organizations are divided into smaller divisions, each having an independent divisional manager. Sometimes performance of divisional managers is linked with the profits earned by the respective departments, divisions. This is also possible, right? Divisional managers are therefore responsible for all the operations relating to their products, the functional structure being applied to each decision. It is possible, of course, that only part of a company is divisionalized and activities such as administrative. So they have given certain things. Fine, never worry about it. Next, transfer pricing plays a very important role in international taxation. Also, we will see what that is. Next, I just wanted to tell you one very important thing here. Look, as the transfer price chosen can impact the performance evaluation. What do you mean by performance evaluation? Evaluating the performance of every division. It is important that the transfer price is perceived as equitable to all the parties. Equitable means what? You should fix a fair transfer price. Why? Now if you fix a high transfer price, now division B will not agree. Why? Because it is a cost for them. Correct? If you fix a low transfer price, division A will not agree. Why? It is a revenue for them. So it has to be equitable. It has to be fair to all the parties. In our example, X and Y, or division A and B. Correct? When there is a market price for the transferred good or service, market price is the appropriate transfer price. However, transfer price is often an issue for intermediate products that have no market value. Now, when is market price a good transfer price and all? When we get actually into the technicalities of this chapter, I will explain it. Don't worry as of now. But look, they have used the word intermediate product. This also I explained in that example. What was our intermediate product? That bottle, empty bottle. Correct? When one division of a company sells to another division, both the divisions as well as the company as a whole are affected. The price charged for the transferred goods affect the costs of buying division and the revenues of selling division. Thus, profit of both the division as well as the evaluation and compensation of their managers. So profits of the division and evaluation of the managers are affected by the transfer price. That is all. That is all. They have not said company's profit is affected. Be very clear. Profits of both division and evaluation of the managers of the division are only impacted by transfer price. Transfer price does not impact your overall profit. Are you clear? Since profit based performance measures of the two divisions are affected, transfer pricing can be a very emotionally charged issue. Yes, because fixing the right transfer price has to do directly. It directly impacts what? The performance appraisal of every division managers. Now, if a wrong transfer price is fixed, it can definitely affect emotionally. It can emotionally affect these managers because at the end of the day, they are human beings. Correct? A wrong transfer price will say that overall company has made 20 rupees of profit. Now, earlier without transfer price, what I said, entire 20 rupees was generated by division B only. Division A made 0. But after I fixed a transfer price of 8 rupees, we saw that division A generated a profit of 3 rupees and 17 rupees of profit was generated by division B. Correct? When the transfer price was fixed at 8. Suppose you fix the transfer price as 10. Slightly more will be the profit from A and slightly less will be the profit from B. So, as the transfer price increases or decreases, the division-wise profitability will also increase or decrease. Thereby, the evaluation of performance of the respective division managers will also be impacted. And of course, since they're all human beings, it can also emotionally impact them. That's why it's a very, very sensitive area. It's a very sensitive area. It is something that happens within an organization. And remember always, this works out only when the company has a decentralized form of functioning. That is what they have divisions, and each divisions are given the full power to do whatever activities that are within their control. Are you clear with this? And this transfer price cannot be interfered by the head office. It has to be mutually agreed by the, it has to be mutually agreed by whom? It has to be mutually agreed by the divisions all by themselves, and they need to voluntarily, they need to come up and fix a proper transfer price. Are you clear with this? How do we do that and all we will see in this chapter. But first, this is what is this chapter all about, and I want you to clearly understand what this first introduction paragraph says. Are you clear with this? Yes. So now look at this advantages, disadvantages. I'll just run through it. So what are the main advantages of transfer pricing? The top managers will have more time to devote for general planning. Yes. Why? Because now you have delegated. The branch level activities are delegated to the branches or divisions. Correct? So they can concentrate more on only their head office activities. Correct? They are not burdened with routine tasks. Next, the decision making task is distributed among more personnel so that each person has enough time to give matters sufficient attention. Correct? So division level, the respective divisions decision making are taken by the respective division managers. So division A managers will only take care of his decision making. Decisions that revolve around what? That revolve around his particular division A. Correct or not? Yes. So now the decision making task is distributed among more personnel. So each and every person has enough time to give the matters sufficient attention. Next, better control can be achieved. Yes, we know why it is. As the manager can move quickly to make the needed correction. Why? He has the power. He need not wait for the head office to give instruction. He has the power. Branch level or division level, the powers are given. They can take quick decisions. Next, managers are better motivated as they have more control over those matters on which the performance is measured. Now we saw division A was a cost center. It turned into a profit center. Now the managers are all motivated. Yes. Next, managers are more likely to exercise initiative in such matters as comparison shopping in order to reduce the cost of outside material. Comparison of internal and external costs tend to keep the internal costs such as the transfer pricing of the intercompany goods or services in line. What do you mean by this? Very simple. Very simple. We had two divisions, division A, division B. Correct? Now let us say this empty bottle. Division A says, look, I will fix the transfer price at 10 rupees. Okay, so every time you buy an empty bottle from me, I transfer an empty bottle to you. Division B has to pay 10 rupees. Correct? Now, what will division B think? Now, what happens? These divisions have separate managers, and these managers only think about their they think only about their division. They will not think about the company as a whole and all. Correct? Now, you are the manager of division B. Immediately, what will you do? You will think, suppose I buy this empty bottle from the market. external market, right? From market in general. Now I need to pay 9 rupees and only buy it. Now, if I buy it from my own company, my own division, he is charging me 10 rupees. Now, you are manager of division A. What will you do? Instead of buying the empty bottles from division A, you will buy it from outsider. Correct or not? That is what they are mentioning here. So managers are more likely to exercise initiatives such as comparison shopping. They compare the prices. Yes, in order to reduce the cost of outside material, comparison of internal and external costs tend to keep the internal costs such as the transfer pricing of the products, of the intermediate products, in line. Now what will this division A do? This department A, what will he do? Now he will not quote 10 rupees and all. He will also know that, look, in the market the same product division B can buy it at 9 rupees, so I will also restrict only to that level. So between that the bargaining will happen. Are you clear with this? So generally, just like that division A cannot keep on increasing the transfer price. There has to be a check. So these managers of each and every division, they also check the external market prices. Are you clear with this? Yes, of course, whenever you have a particular concept, there are always disadvantages. So what are the major disadvantages of transfer pricing? The extent of authority and responsibility to be decentralized is difficult to determine. So generally we are saying it's easy for us to say theoretically that, okay, I'm giving the powers to division A, so and so powers are given to division B, correct? But in real life, head office will generally interfere in the matters. They will say that yes, we are decentralized form of organization, but generally these people, the head office, will interfere in the matter. That's what they are saying. The extent of authority and responsibility to be decentralized is difficult to be determined. Are you clear with this? Yes, they are talking about some practical issues. The managers needed to head the decentralized units must be selected and trained, a process that is often time consuming and expensive. Look, now every department, every division will have its own manager. Now this manager has to run his own entire division. He needs to do, correct? Inside the division, entire all the activities, production, administration, saying everything, he needs to take care of it. So he needs to be properly trained. It's like a mini CEO of that division, correct? So these guys cannot be randomly picked and they cannot be put in charge. You need to properly select them and you need to train them. That is often time consuming and expensive, correct? These are some theoretical aspects. Next, the varied activities of decentralized units must be coordinated, which is again a difficult task. Yes, now there has to be a proper coordination between the divisions, and now the divisions are competing with each others. How will they coordinate properly? So this is a practical limitation that we've got. And evaluating the performance of the units and the individual managers is often problematic, because based on the transfer price, what happens? The profit of the division will change, and based on that, your performance evaluation also changes, correct or not? Yes, that is a problem. So if you rightly fix the transfer price, then it's okay. If not, there will be a problem in your performance evaluation. Are you clear with this? So to put it short, whatever we have seen here, one second. So to put it short, whatever we've seen here, yes, so we actually started with this chapter called as transfer pricing. What was the objective of this chapter? The objective is to gain control over the organization. Generally, transfer pricing is used for big companies which functions in a decentralized manner. Now, why do we have this transfer pricing? To promote interdivisional competition, which in turn increases the efficiency. Are you clear with this? Now, we saw that a few jargons we saw: supplying division, receiving divisions, intermediate product. So division A was supplying division, division B was receiving division, and intermediate product was what? That glass, empty bottle that we saw, correct? And in our example, division A was a cost center and division B was a profit center. Now what is the problem here? The cost center will never be motivated to perform well. Why? Because they never take the credit for the company's overall profitability, correct? We saw this overall company's profit was 20 rupees. That was attributable to entirely division B. Division A, we said no profit was made. Why? Whatever I manufacture, I will have to just transfer it to division B at cost. Yes. So how will these guys be motivated? They will not be motivated. And if division A is not motivated, obviously who will supply the bottles to division B? No, they need to buy from outside, which may prove to be expensive. Correct or not? Yes. So in this case, what happens? The entire company will itself fail. So basically what we should do, the solution for this is convert all the divisions into profit center and then create a healthy competition among them in such a manner that all the divisions strive to perform really well that increases the efficiency, and you can also evaluate the performance of each and every division in a proper manner. Are you clear with this? And how do we do that? We actually introduce a concept called as transfer price. And what do you mean by a transfer price? The price at which the intermediate product is transferred from by the supplying division to the receiving division, and this transfer price is generally more than the cost. It is generally more than the cost. Are you clear with this? And in our example, I took transfer price as 8 rupees. Sir, just like that, can I keep on transfer price randomly? No. Fixing of transfer price is a very critical decision. Why? Will it impact the overall profit? No, it will impact the division wise profit. Sir, what if it impacts the division wise profit? Now, division wise profit is the basis for you to evaluate the performance of the division. Correct? So each and every division should be given we should evaluate them properly. They should be given a very fair share of whatever profit is attributable to them, because the manager's incentives might be directly linked to the division wise profit. So inside the organization, there shouldn't be any conflict. So the transfer price should be fixed properly. Are you clear with this? So there are multiple methods of fixing the transfer price. Here I gave 8 rupees flat. For what? For the purpose of understanding the example. That's all. Are you clear with this? You need not worry about it. How do we fix the transfer price? In case of conflict, how will we resolve? That we will be seeing during the course of this particular chapter. Are you clear with this? Yes. And I've mentioned all these things. Basically, the supplying division is a cost center. However, to promote the interdivisional competition and to improve the efficiency and control, companies may treat the supplying division as a profit center. And the transfer of intermediate product will be deemed to be the sales of the supplying division, and the transfer is made at a price higher than the cost, and hence is called as the transfer price, right? Fine. And transfer price is a revenue. It's a selling price for whom? It is a selling price for the supplying division. Selling price, technically it's not called a selling price, but for understanding sake, I've written it. So transfer price is actually a selling price to whom? Supplying division. It is a purchase cost to the receiving division. And remember, it is neither a selling price nor a purchase cost from the viewpoint of the company as a whole, and thus TP will affect the divisional profits but will not affect the company's profit generally. Are you clear with this? This is about the introduction to this chapter called as transfer pricing, a very important chapter. It requires a lot of logical reasoning, and in this session fully, what I have done is I have just introduced you to the concept of transfer pricing, because this is not like the other chapters. This is not like what you've seen before. This is something to do with the inside of a company. Inside the company, there are some decision making involved. So this can be slightly tricky. And first, the problem that I've seen with many students is they don't understand why do we have this chapter, what this chapter says. Without that understanding, if you enter into the subject, definitely you will not understand anything. So that is the reason why we are spending this much amount of time in understanding the basics. If you spend more time in your foundation as in when you're constructing a building, if the foundation is laid strong, automatically the building will be very strong. Correct? Similarly here, I've told this before also, more the time you spend on the concepts, lesser will be the time you spend in the questions. Always remember this. Always remember this. In fact, in the words of Abraham Lincoln, the former president of US, he said, "Give me 6 hours to chop down a tree. I will spend the first 4 hours sharpening the axe." So he's saying, if you give me a total of 6 hours to cut down a tree, now I will not go and start cutting it right away. No, I will spend 4 hours to sharpen my axe. Axe is what? The tool used to cut it, right? 4 hours I will spend on sharpening the axe. Automatically now the axe is very sharp. It will only take me 2 hours to cut down the tree. So more the time you spend on the concepts, lesser will be the time you spend in the problem. Always remember this. Are you clear with this? So on that note, I'm closing this video. So I will see you all in the next one. So please revise whatever we have seen till now. So please revise the entire fundamentals of transfer pricing. So I will see you all in the next one. Thank you so much and bye-bye.